And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up on the program, Nigeria's Eurobonds surges following suspension of CBN Governor Emefiele. And Egypt's inflation rate climbs above 37% in May. And more women land jobs in Kenya's labor market. Hello and welcome to Business Incorporated live on Channel Television. I'm Ladi Williams. First off, let's take a look at what's happening with the markets on the African continent. Right here we see the NGX that's closed, and it did close down negative. It's a public holiday right here, Democracy Day in Nigeria. So the market, the local bourse is closed, but closed negative on Friday, 0.05%. And we see South Africa, that's opened down marginally, 0.01% at intraday. In North Africa, we see the market there intraday, it's down about 0.20%, talking about the EGX 30. And Kenya snapped up that positive trend. It's closed down 0.06% on Friday. And to the Middle East now, we see it's mixed sentiment right there in the UAE. It's positive sentiment we see in the UAE, 0.24%, same range there, 9,381 points. That's what we see for the Abu Dhabi index. Other parts, other markets we track in the Middle East, it's negative there. Saudi Arabia down marginally by 0.05%. Qatari index, that's down more, 0.29% there at 10,178 points for the all-share index. And now let's head on to Europe now. See, one woman has taken BioNTech to court over side effects. We see Lars Holter as with the details. Great to have you, Lars. So what are the details here?
Yeah, thanks for having me. Indeed, BioNTech is going to court today. A female patient is seeking damages for alleged side effects of its COVID-19 vaccine. It might not be the last case of this sort. There are potentially hundreds in the country. Now, for this one, the anonymous woman is suing the vaccine maker for at least 150,000 euros in damages for bodily harm as well as compensation. She says she suffered upper body pain, swollen extremities, fatigue, and sleeping disorder, and that's due to the vaccine, she alleges. Now, obviously, German and European Union regulators had approved the vaccine for use and found that the shot has a positive risk-benefit profile. However, the woman's lawyers want to challenge that assessment.
And what's BioNTech's side of the story?
Yeah, they don't seem to be too worried about this case. For one, German pharmaceutical law states that makers of drugs or vaccines are only liable to pay damages for side effects if medical science shows that their products cause disproportionate harm relative to their benefits, or if the label information is wrong, of course. Now, BioNTech says it concluded after careful consideration that the benefit-risk profile of Comirnaty is actually positive. Comirnaty is the drug we're talking about here. It was developed by BioNTech and distributed in cooperation with US pharma giant Pfizer. So BioNTech says that the case is without merit. And generally, that should be true. The drug was given to 1.5 billion people worldwide, including more than 64 million in Germany. And the European Medicines Agency says that it is the most commonly used drug in the Western world and that it remains safe to use. It's well known that some people have experienced some side effects, which is not at all unusual in the field of vaccines. Actually, authorities have registered so far almost 1.7 million spontaneous reports of suspected side effects. That was the number by last month. And it would translate into about 0.2 for every 100 administered doses. Most of these side effects were benign, though. They include headache, fever, fatigue, and muscle pain. On the other hand, of course, it should be noted that vaccines are estimated to have saved almost 20 million lives globally during the pandemic.
And investors might want to know if this could pose a risk to the company or others in the sector. How does this impact the market?
Yeah, that's an interesting question. It is not clear who would even pay the legal costs or compensation if the plaintiff would win this case. Some of the EU's bulk purchase agreements with vaccine makers, including BioNTech, Pfizer, of course, contained full or partial liability waivers for both legal costs and potential compensation. That would likely force EU governments to bear some of the costs. And again, that's only if the case would go through anyway. Also, Germany has a public sector financial support scheme for people who suffer permanent harm from vaccines. It's known as a no-fault compensation program. And looking at some other markets, the United States has granted manufacturers immunity from liability for COVID vaccines that receive regulatory approval. So even with potentially a few hundred cases in the pipeline at this time, it doesn't look like any of the vaccine makers or any investors have to worry about it at all.
All right, thank you so much. That's Lars Holter right there in Berlin with those details. Still a developing story. We'll definitely keep tracking that. Let's move on to the UK now. We have Juliana standing by right there. Great to have you, Juliana, and happy Democracy Day from here in Nigeria. So the latest Transatlantic Confidence Index has found that U.S. companies' confidence in the UK's business environment dropped for a third year in a row. What's driving this?
Yeah, you're absolutely right. Good afternoon and happy Democracy Day to you, Laddie, and to all of our viewers watching both in Nigeria and outside of the shores. So it does appear as if the US companies remain consistently concerned about the investment landscape in Britain. And this is, of course, according to Bain & Co.'s new edition of the Transatlantic Confidence Index. This has been going for 3 years, and in every single year, it does keep showing that businesses and investors in the US are not sure about what is going on in the UK, especially if you just have a look back at what's happened in the past 12 months. I can't even believe it, but we have had 3 prime ministers and 4 chancellors or ministers of finance. And we expect there to be more change because, of course, there was breaking news over the weekend about Boris Johnson. That triggered, of course, 2 other MPs' resignations. So we're expecting a general election to be called any time now. And it is the political instability that some investors are looking at. Coming under that umbrella, of course, is Brexit. A lot of US investors, including people that live in the UK, are still not sure about the terms of trade between the EU and the UK. Professional qualifications, there are some US execs that would love to work in the UK. Can their professional qualification be transferred? That's still an issue up for discussion between Jeremy Hunt and the Treasury in the UK. And also there are issues about visas. So when it comes to obtaining a visa, it's not just people in the global north that struggle to get one. There are executives in America that are still struggling with this too. So it's quite embarrassing, I would say, this announcement by Bain & Co. Because, of course, we know that Rishi Sunak, the Prime Minister, has just returned from his first visit to the White House. And under that visit, there was lots of discussions about this new transatlantic economic treaty where both Joe Biden and Rishi Sunak will work together to foster some of these economic investment opportunities. Nothing like what was promised during Trump and Johnson's era, where we were talking about some sort of free trade agreement between the 2 countries. But certainly they want to work together to try and foster that strong allyship. Bearing in mind, of course, we know that this survey was done before Rishi Sunak went to the White House, but it does still go to show that even Britain's strongest, most supportive, vocal ally does have concerns. It wasn't just the US businesses that were surveyed. British businesses were surveyed. And to the contrary, British business are feeling more confident about investing in the UK. And then, of course, you've got the stark contrast between American businesses saying, actually, we're not sure about UK investments at this time.
Right, I guess as long as the Brits are happy at this point. But to other matters now, we see the...
Are we?
Well, maybe a little bit happy, but HSBC's UK boss has warned that mortgage costs are going to rise further going forward. How's this being digested over there?
Yeah, not great. There seems to be some market turmoil when it comes to the housing sector at the moment. Of course, we know this was all triggered last September during Liz Truss's tenure, which really rocked the markets. But it's not just that. It's the fact that the Bank of England, for 12 consecutive months, have risen interest rates. Interest rates are at 4.5%. We're expecting them to be hiked up to about 5% when the Monetary Policy Committee gather next week, Thursday, at Threadneedle Street to decide on interest rates. Of course, they're not doing this, or Andrew Bailey, the Bank of England governor, isn't doing this to heap more headache on homeowners. It is to bring down inflation. And inflation, even though it is down from the double digits, still remains stubbornly high, especially when you compare it to the other G7 nations. So we are anticipating this. The problem with that is that, of course, if you have borrowed a significant amount of money, it is going to cost you more to pay back. And that's what Ian Stewart, the boss of HSBC, was saying today when he was speaking to British press here in the UK. He predicts that about 300,000 mortgage holders who bank with HSBC will be coming off their fixed tracker mortgage this year. Fixed tracker means that your interest rate remains at the same rate, and they are going to get a pretty shock of their life because, of course, some of these people joined these fixed tracker mortgages when interest rates were at about 1.5%, or they managed to get it at 1.5%. They're going to come off, try to get a new product. It could be anywhere between 5 and 6%. We're not sure at the moment because, of course, so many banks are now pulling all their mortgage products off. HSBC did it last week. I think just before I came into the studio, I saw that Santander has also withdrawn nearly all of its mortgage deals. So it's a huge issue, and it just adds to an already ferocious cost of living crisis. According to some economists, some mortgage owners are paying an extra £150 per week to make sure that they pay their mortgage. There have been a significant amount of defaults, and it goes to show that this inflation issue and the cost of living crisis has to be resolved sometime soon because lots of people are going through a significantly difficult time at the moment.
Yeah, it's practically pain everywhere at this point, but it's a holiday right here in Nigeria. I know the markets are still open over there in the UK. How are they looking?
The markets are still open and they're looking pretty good, actually. We've got the UK, or shall I say the London Tech Week, which has kicked off. We've got about 850 investors in town, 3,500 small to medium-sized enterprises are showcasing all of their new tech products. AI has been talked about, VR, VI. The Prime Minister kicked off the proceedings this morning. I think that's really cheered the market. So the FTSE All-Share at intraday is up 0.09%. The FTSE 100 is up 0.03%. And the FTSE 250, the domestic market, Laddie, that's up by 0.45%. In the currencies market, the British pound is currently trading up against the US dollar by 0.10%, though down against the euro by 0.18% and down against the Japanese yen by 0.06% at intraday. It's worth saying we're going through a heat wave, actually, in the UK at the moment. So it's very, 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 very hot here. Lots of things are not working, but we're coping.
Yeah, definitely coping at this point. Thank you so much, Juliana. Do stay safe there.
Thank you.
All right. So, yeah, we'll take a break now. When we come back, more stories on the African continent. Do stay with us. This is Business Incorporated. Welcome back to watching Business Incorporated live on Channels Television. Two other stories now. We see inflation rate in Egypt increased to 32.7% in May after having decelerated to 30.6% in April, according to statements from the Central Agency for Public Mobilization and Statistics. As a result of food and beverage costs, the single largest component of the inflation basket rose by 60%, but Egypt's core inflation rose to 40.3% in May from 38.6% in April. That's from data from the Central Bank of Egypt. See, imports have been more costly for Egypt in light of rising interest rates worldwide. See, inflation in Egypt tripled over the duration of a year after Egypt devalued their national currency to secure a $3 billion fund from the International Monetary Fund. Inflation in Egypt is also at risk of being further accelerated by currency depreciation. And in Kenya, women are slowly catching up with men in the labor force participation as more employers embrace gender parity policies, closing the gap between male and female workers. In Kenya's modern sector, which employed slightly over 3 million workers last year, job analysis shows that women's participation rose to 38.3% of the workforce, up from 35.9% in 2013. In 4 to 10 years, more females and males jobs were created, and even in 2020, and Kenya's employment sector recorded massive job losses as companies struggled. Fewer men lost jobs as compared to men. And Nigeria's international bonds surged today following the surprise weekend suspension of a central bank governor, Mr. Gordon Emefiele, with investors betting his removal will allow President Bola Tinubu to better pursue his promise of resetting monetary policy settings that have been blamed for crippling Africa's biggest economy. Nigeria's international debt instrument jumped the most among emerging market peers at the open today, with its longest dated dollar bonds rising to the highest since January. Notes maturing in 2051 rose nearly 3 cents on the dollar to as high as 73.45. As the biggest gain since April. Analysts say the outcome of Emefiele's removal should be that Nigerian bonds strengthen, while benchmark interest rates may rise as the nation's asset becomes more attractive to foreign investors. Governor Gordon Emefiele was suspended by President Tinubu after the markets closed on Friday, then detained by Niger State Security Service a day later for unexplained investigative reasons. Meanwhile, the Deputy Governor, Folashodun Shonebi, is in charge of operations at the bank and has taken over in an acting capacity. And President Bola Tinubu, in his Democracy Day address earlier this morning, has labeled the decision to remove fuel subsidy as a necessary move in order to ensure the growth of the Nigerian economy. He noted that for this growth to occur, Nigerians must make sacrifices, one of which is the current challenges experienced as a result of removal of subsidy on petrol. He assures Nigerians that their sacrifices will not be in vain, and further states that his government will move to soften the impact of the removal of fuel subsidy by investing in other sectors and infrastructures. Take a listen.
In my inauguration address on May 29, I gave effect to the decision taken by my predecessor in office to remove the fuel subsidy, the albatross, and free up the collective use of much needed resources, which had hitherto been pocketed by a few rich. I admit the decision will impose extra burden on the masses of our people. I feel your pain. This is one decision we must bear to save our country from going under and take our resources away from the stranglehold of a few unpatriotic elements. Painfully, I have asked you, my compatriots, to sacrifice a little more for the survival of our country. For your trust and belief in us, I assure you that your sacrifice shall not be in vain. The government I lead will repay you through massive investment in transportation, infrastructure, education, regular power supply, healthcare, and other public utilities that will improve the quality of lives.
And as Nigeria celebrates Democracy Day, there are discussions about the correlation between democracy and economic development. According to Professor Omano Digeji, democracy does not necessarily lead to economic development, but if harnessed with good leadership, Nigeria can enjoy dividends of democracy. I spoke to him earlier today on Business Morning. Take a listen.
There is no empirical evidence to indicate that there's a correlation between democracy and development. What you have is that authoritarian developmental states are unsustainable in the long run. But even if there is no correlation between democracy and development, democracy on its own is something that is worth celebrating. The right to people to associate, the right to people to have a free speech and move around, and to be human beings. Those are values that are worth celebrating in their own right. But the sustainability of democracy depends on development. Nigeria has actually not done very well. I think besides 2002, when our GDP growth rate was about 15%. When you then look at in subsequent years, it is going up and down, and I think at the moment we are at about 3%. In the democratic dispensation, we have witnessed a recession. So from a growth perspective, from economic growth perspective, I think we have not done very well.
And now to South Africa. A group of environmental conservation activists have stormed a venue of the annual general meeting of banking giant Standard Bank. And they say this is in protest against the bank's involvement in the financing of Total Energy's East Africa crude oil pipeline in Uganda and Tanzania. The protests outside the Standard Bank head office in Rosebank in Johannesburg, South Africa, they called on Standard Bank to refrain from acting as financial advisors to the proposed project, which they claim has already resulted in many human rights violations like forced relocations, as well as potential destruction of the ecosystem. The ECOP project is expected to be one of the world's longest heated crude oil pipelines. Malika Dasso of Extinction Rebellion South Africa says they want Standard Bank to stop this and focus on investing in poorer communities across Africa. And that's Business Incorporated today. The markets right here in Nigeria open tomorrow. Be watching out how the markets open. Thank you so much for watching. I'm Ladi Williams. Bye-bye.